Have you ever asked yourself, can I really buy a house with a reverse mortgage? Well, you clicked on this video, so I assume you're at least thinking about it. Well, hold that thought, as we're about to embark on a thrilling journey about this often overlooked but fascinating home buying strategy. Picture this. You're in the sunset years of your life, looking forward to a peaceful retirement. But there's a slight hiccup. You want to downsize, move closer to your family, yet you're hesitant about draining your nest egg on a new home or get a new mortgage payment at this phase of your life, especially in this rate environment. Now, what if I told you there's a unique solution that might not just be solve your problem, but also redefine your financial landscape? Today, we're going to unravel the mysteries of reverse mortgages and their role in home buying. We'll debunk the myths, delve into real-life case studies, and empower you with the knowledge to make decisions that could significantly impact your financial destiny. Stay with me until the very end as we'll dig into the actual numbers with some case study scenarios about what buying a house with a reverse mortgage may look like for your family. Trust me, you don't want to miss this. But first, let's dive into the basics of a reverse mortgage. Simply put, a reverse mortgage is a type of loan that lets homeowners 62 or older turn part of their home equity into cash. If you want an in-depth look at reverse mortgages, I did a comprehensive video about reverse mortgages here that you can watch after this video. Unlike a traditional mortgage where you send monthly payments to a lender, in a reverse mortgage, it's the lender who pays you. These payments can come as a lump sum, regular cash installments, or a line of credit. The repayment kicks in when you sell your home, move out permanently, or pass away. The Federal Housing Administration, or FHA, under its Home Equity Conversion Mortgage, or HECM program, lays out the criteria for a reverse mortgage. But we're not here just to understand what a reverse mortgage is. Let's see how you can wield this powerful tool to buy a new home while debunking a few myths along the way. Now let's explore the process of buying a house with a reverse mortgage. This is where the HECM for Purchase program, introduced by the FHA in 2009, comes into the picture. Imagine selling your existing home, using the proceeds as a down payment, and financing the rest with a reverse mortgage. That's kind of how it works. So how much do you have to put down? For a reverse mortgage for purchase, you put down around 50 to 60% or so, depending on your age. So to be clear, this is not a low down payment program. The choice essentially becomes, do you pay all cash for the next house or use a reverse to lessen that load? In the upcoming examples, I'll show you just how significant it can be, so stay tuned. Okay, what is the general process if you want to buy a house with a reverse mortgage? First step is to find a mortgage broker knowledgeable in reverse mortgages. Look for a broker with a solid reputation, excellent customer service, and extensive experience in reverse mortgages. Just because a mortgage originator has an NMLS license doesn't mean they know much about reverse mortgages. Ask them about their experience with reverse mortgages and reverse for purchase in particular. But in this video, I walk you through my process that I've used with my clients that have successfully bought a home with a reverse mortgage. The next step is to have a consultation with me to do a full loan application, which you can do online or over the phone. I'll then give an evaluation of your max purchase price and what the numbers look like based on the age of the youngest borrower and your available funds. I'll also identify any roadblocks that may affect your eligibility to get a reverse mortgage based on our interview. Once everything checks out, I'll then send you a proposal which lays out the reverse mortgage loan terms and cash to close for a certain purchase price. In that proposal will be a list of HUD counselors, which is the next step, HUD counseling. You pick a counseling service on the sheet, and you can do the counseling either on the phone or in person. This is a mandatory requirement for all FHA HECM loans. The counselor will then take the numbers in my proposal and go over them in more detail to ensure you are fully aware of the terms of the loan. Once completed, you'll be sent the HUD counseling certificate, and this is good for 180 days. After that's done, it's time to start shopping for homes. I'll work with your realtor to make sure the offers are presented to the listing side the right way. Reverse mortgages in general are misunderstood, and not many realtors know much about the reverse mortgage for purchase. I usually call the listing agent and help them understand the benefits of accepting this loan for their seller. It's an FHA loan, and some listing agents and sellers push back a little. However, to be eligible for this loan at all, like I said before, you need to put down a significant amount of money. The loan is essentially approved if you meet the requirements, and you know that before you even make an offer. Some realtors fear loan approvals falling apart mid-contract, which can happen with traditional forward mortgages that use different underwriting standards. Once they understand those key points, strong cash buyer and the loan is approved up front, they feel more at ease. So you get an offer accepted on the home, and the process is fairly similar to any other purchase. An appraisal is ordered to verify the value of the home, which is the starting point for the reverse mortgage calculation. You get title and insurance and other required services per the state you live in. The loan process itself takes 30 to 45 days or so. Then we get it clear to close, you wire funds, and then you did it. You bought a house with a reverse mortgage and continue to enjoy the retirement years together. What about me? I'm Emmett Dempsey, mortgage broker and owner of Treasure Coast Mortgage here in sunny Port St. Lucie, Florida, and welcome to another video. Every day I'm helping families just like you navigate their mortgage and real estate journeys, and I want to help yours as well. As we continue this exciting adventure, could you please help spread the word by smashing that like button? Your engagement tells YouTube that to share this kind of valuable content with other knowledge seekers like you or other folks like them. And I'd love to hear your thoughts about reverse mortgages. Don't forget to drop your comments below. Now let's dive into some things to think about when buying a house with a reverse mortgage. Remember, this decision extends way beyond just the appeal of no monthly mortgage payments. Consider the location and type of your future forever home, keeping in mind the aspects like family proximity, weather, and accessibility. Remember, some types of homes, like co-ops, for example, aren't eligible for reverse mortgages. Don't forget about maintenance costs as well. Even without monthly mortgage payments, you'll still need to cover property taxes, insurance, and HOA fees, and maintenance costs. Choose a seasoned mortgage broker, like yours truly, who can navigate the complexities of reverse mortgages. Lastly, think about the long-term affordability. There will be other costs, and the reverse mortgage will eventually need repaying, which could influence your estate or inheritance plans. Now it's time to dismantle the myths about reverse mortgages that often breed unwarranted fear. Are you ready for some myth-busting action? Myth number 1, you can lose your home. In reality, you can't be forced out of your home as long as you meet the obligations. The loan only becomes due when the last surviving borrower sells the home, moves out, or passes away. Myth 2, you can't leave your home to your heirs. The truth is, your heirs can choose to repay the reverse mortgage and keep the home, or sell it and repay the loan. Myth number 3, the bank owns your home. This couldn't be further from the truth. You retain title and ownership of your home. The lender merely has a lien against the property. Myth 4, reverse mortgages are a scam. These are legitimate financial products. Like any financial tool, misuse or misunderstanding can cause problems, but when used wisely, they can be powerful assets. Knowledge truly is power. Don't let misconceptions block your path to an informed decision about your financial future. Okay, the time has come. Case study time. Let's dive into some actual scenarios of what a reverse purchase can look like for you. Okay, welcome to the demonstration. Okay, here's a strategy of reverse purchase downsizing. Okay, in this scenario, a 70-year-old couple in New York sells their home for $500,000 and purchases a home in Florida for $350,000. In Florida, that happens just about all the time. A lot of New Yorkers moving here to Florida. In fact, a lot of folks moving to Florida from all over the country. So, no matter where you are in the country, imagine yourself moving to Florida. All right, so basically, you sell for $500,000, you've retired, and you move down here. So they can buy a house cash for their new purchase price, but they want to retain as much funds for the sale of the departure home and increase liquidity. Okay, so that was a question I highlighted earlier. It's basically pay cash or use the reverse. Okay, so here's kind of how it looks. If you downsize without it, and $500,000 sale, roughly 8% cost to sell with commissions and all the things. Net proceeds of $460. It's about $350 for the new home price. You get $110,000 remaining. Not a bad gig there. So you have some money left over, put it in the bank. You're good. No mortgage payment. Or you do the reverse purchase. Same flow, $500,000 minus $40,000. Use $460. Same as over here. The purchase price of the new home is $350. The reverse for purchase roughly is $135. So you use $214 versus the full $350. Leaves about $245 funds remaining. Okay, so you go from $110 to $245, effectively more than doubling your net proceeds. So basically your net cash that you can put in the bank, invest, give to your kids or what have you. So basically the key phrase for reverses is liquidity. It kind of frees up more cash and cash flow initially. So that's the downsizing one. Okay, so what about upsizing? It's a myth that all seniors want to downsize. What if they want to get a bigger house? I know personally, my in-laws live in the house behind us. There's a lot of nuclear families and that live together. What if you want to buy a bigger house together? So this is how it looks like. 70-year-old couple in Florida sells their home for $500,000. They purchase a new home for $650,000. They don't want any monthly mortgage payments. Cool. All right. So here's how the flow looks. Basically, sales price $500,000, 8% cost to sell. Net proceeds of $460. New home price of $650. It's going to cost you $190,000 out of pocket. So you need to have those liquid reserves. Okay, versus the reverse for purchase. You sell your home $500,000, 8% cost to sell. Same here, $460. The new home price is $650. You use $259 of the reverse for purchase, and then the sale for the new home. So basically, you're going to get $67,000 at the end versus needing $190. So that's a huge swing, guys. So it's either money out of pocket, or you just use the equity and the reverse mortgage proceeds to basically be cash neutral and get $67,000. That's not nothing. So that's a huge swing. And again, the key word here is liquidity. All right. And what I didn't really go over much in the video before is reverse mortgages. There's proprietary products that are under 62, usually 55 or older. And here's an example of one. This is a jumbo under 62 program. So say you're a 57-year-old single man in California. All right, you want to sell your house in California, move to Florida. Happens all the time. You wish to purchase a new home without incurring any monthly mortgage payments, and look at a property about $1.8 million. Okay, here's how it looks like. All right. So you sell your home in California 1.5, 8% cost to sell. Your net proceeds of 1.38. All right. So the new home price is 1.8 million. You're going to need $420,000 to close. Okay. The reverse purchase, right here is basically, you sell your house for 1.5, 8% cost to sell. Your net proceeds of 1.38. In your new home price. So this one, you use a home safe for purchase proceeds of 681. You need only 1.18, and you'll get 261 back, funds remaining. So basically, you go from needing almost $500,000, over $420,000, to getting money left over. So you can sell your house, and after all the flow, all the things happen with the home safe and the reverse, you'll get 261 back. That's a huge swing, guys. That's a huge swing. Okay. You can also use it to buy multifamily. Depending on where you're at in your state, you can buy a fourplex, buy one side. Remember, a single family is 1 to 4 unit, so you can buy one unit of a fourplex, live in that, and rent out the other 3 sides. That's just something to think about. Here's how that flow looks like. Again, kind of the same thing. We have a cash flow of 505. Additional funds from the sale. I mean, usually it would cost you to buy it, but you can use 75% of the rent against it. So it can help you buy a little bit of rental property if you live in one section with a fourplex or moreplex. So I don't know too many around here in Florida, but that's kind of what I see. Okay, at this point in the video, YouTube wants you to watch this video right here.